Thank you for staying with us. Time for Channel 1 Business News. Micro, small and medium enterprises need to explore new markets and expand their value chains to survive the tough economic times. Stanbic Bank Executive Director Pauline Mbaya says initiatives such as capacity building and well-thought expansion plan will help businesses easily access affordable finance and attract investors.
Micro, small and medium enterprises are always on the short end of the stick when it comes to accessing credit from financial institutions. The Central Bank of Kenya says a firm with an annual turnover not exceeding 500,000 shillings and employing 1 to 9 people may not have access to loans beyond 10 million. Even then, this is limited to the manufacturing sector, where farming and service sector MSMEs in the same category cannot access funds above 5 million shillings. Banks are now encouraging such businesses to diversify their markets and show the potential of growth through capacity building as a qualitative means of assessing the potential of growth in order to access more funds from formal channels.
If you start a business, you are in it for the long haul, you should not give up. Always look for opportunities to grow, have a plan. Most of them have explained to us how they've got a 5-year business plan now that they've learned, and continuously skill yourself as an SME. There is a lot of opportunities there. National government and the county government is offering, as well as private sector and development partners in partnerships.
Capacity building is one of them, which we have been carrying out, and we have also worked on the issue of infrastructure, and we believe that this particular training goes a long way in preparing them for access to finances.
Meanwhile, WPP Scan Group has recorded 75 million shillings in profit after tax, translating to an almost 300% year-on-year growth. This comes against the backdrop of reduced client margins stemming from inflationary market pressures. WPP says the firm recorded a 2.2 billion shillings gross profit and an earnings per share growth of 450%. Despite this, the operating costs increased by 3.3%, with a loss after tax of 38 million shillings.
Our net revenue, which is billings less pass-through, came in at 2.2 billion, a decline of 6.7%. In line with that, our operating profit was a loss of 349 million. However, our PBT was positive, 376 million, a growth of 180%, driven by FX gains, other income, and in addition to that, we have delivered a PAT of 75 million.
Ibak Said for Lunchtime News.